So as you see these oppressive types of regulations come down from Washington, it's just a further affirmation as to the value that these things really are adding and to the threat that they pose to the prevailing U.S. dollar dominance.
Our mission at SD Bullion is clear: the lowest cost gold and silver available online. While we do not have pretty blue boxes, free shipping on every order, or glamorous gold and silver infomercials, SD Bullion has the lowest prices that may save you hundreds on your next order. So before you make your next investment, do the math and join the over 40,000 new customers who have recently made the switch to SD Bullion. Why pay more?
Hey everyone, this is Elijah Johnson with SilverDoctors.com, and back with us today is Jerry Robinson from FollowTheMoney.com. Jerry, thank you so much for joining us today.
Hey Elijah, it's always great to be with you. Thank you.
All right. Well, I'd first like to discuss cryptocurrencies because, it's been the story for a while now that cryptocurrencies are just skyrocketing. Bitcoin, touched around 3,000. It's about 2,500 right now. And we're also seeing the rise of Ethereum and other cryptocurrencies. Did you want to share your view on cryptocurrencies and this recent skyrocketing of the prices? And also then we have a viewer's question on cryptocurrencies.
Oh, sure. You bet. Well, yeah, cryptocurrencies have become so popular. But they're still very under-owned, I would say, by most American investors. There was a study done. It was a survey that asked the average retail investor here in the United States whether they were actually invested in cryptocurrencies. And the number was pretty staggering. It was just 3%. So based on all the best surveys I've seen, only about 3%, not 3% of Americans, mind you, but 3% of U.S. retail investors are actually exposed to cryptocurrencies. That's very low. I mean, obviously, that should be obvious, but that's very, very low. And the way that these cryptocurrencies, some of them, not all of them, the way that they're really designed is that as more demand comes online, the fixed nature of the supply of these cryptocurrencies will then create will certainly create price pressure to the upside. I think that's what we've been seeing in Bitcoin to a certain extent, Ether to a certain extent, although Ether is not capped. Litecoin is capped to about 84 million. Bitcoin's capped to about 21 million. And so because of the finite nature of these cryptocurrencies, and because the demand thus far has been fairly muted relative to where we think things are going, we think this is just the early innings of a long-term boom-bust cycle in cryptocurrencies. In fact, I've studied a lot of the, as a trader, I'm really into Wall Street history. I've studied a lot of it, especially the early 20th century, turn of the century traders that were out there that made a lot of money in the markets. Cryptocurrencies, to me, look very similar to Wall Street in the 1890s. Very little regulation, lots of potential manipulation, cornering the markets, unsophisticated markets, random flash crashes. I mean, so it's a very early time for people to be investing in cryptocurrencies. And I got an email from one of our members, Elijah, over at followthemoney.com, and he works in the Fidelity at the Fidelity headquarters, the Fidelity brokerage firm. And he sent me a picture from the Fidelity cafeteria where he was paying for his lunch in Bitcoin. Fidelity, in particular the leadership, the executive leadership at Fidelity, have a great affinity for Bitcoin and cryptocurrencies and the blockchain technology in general. And by the end of the year, Fidelity is planning on making the purchase of Bitcoin and probably a few other larger market cap cryptocurrencies available through your average retirement plan. See, this is the kicker. This is the tough thing, is that when you ask people if they own cryptocurrencies, many people don't because they don't know how to purchase them. And therefore, because of this, the demand is then somewhat stifled relative to what it could be in the future. So when Bitcoin becomes very easy for people to purchase, just as easy as it is to buy a stock, and if you can use your IRA money or your 401k money, to do that, then you're going to see, I think, an exponential demand, and people will want to be involved in cryptocurrencies if they have the choice, right? Just as people will often get involved in penny stocks or some other speculative thing because they can. And so that's where we look going forward. We are exposed to the cryptocurrency space. I bought my very first stock in 1996. I was just telling you off the air. And I bought my very first cryptocurrency in 2011, actually at the behest of probably a mutual friend of ours, Trace Meyer. Trace had come on our program, the Follow the Money radio program, back in 2011, I guess, and had mentioned this strange thing called Bitcoin. And he urged me off the air and on the air to buy it. I did, and boy howdy, I mean, can I thank Trace Meyer for that on this program? But on top of that, we've also invested in other cryptocurrencies. In fact, we just listed the 8 that we have exposure to in our latest weekend briefing PDF we put out for all of our members. I'll tell you several of the ones that I own. Bitcoin, we have a core position in with a very low cost basis. Ethereum, we started accumulating Ethereum whenever it became available on Coinbase.com. That's where you can buy Ether very easy. Whenever I saw that Coinbase was offering Ether, I knew that it was likely to go up, going back to that same illustration of demand. Coinbase makes it easy to purchase, relatively easy to purchase cryptos. And so because of that, I figured if they're offering Bitcoin and Ether, then you're probably going to see a pretty sudden demand for Ether. And sure enough, it went from about 7 to 300, over the course of several months. We also have a core position in Litecoin with a fairly low cost basis. We also have access to Ripple. I've been a Ripple crypto holder for quite a while. I've been investing in Ripple for quite a long time. That one's kind of changed over the years in its emphasis. But anyway, we own about 8. And I'll just tell you this, that for me and my family, the way we take our financial plan, we put 5% of our investable assets in cryptocurrencies, no more, and really no less, because I think that the cryptos are here to stay. Not necessarily all the ones we know today, but the blockchain technology we believe is here to stay. So we're investing in that, but not overly. 5% of my total investable assets I have exposed to cryptocurrencies. It's been a wild ride, and I expect it to get much more wild in the future, but that's what that money is for, is pure speculation on this new form of technology known as blockchain.
All right, now moving to the viewer's question on cryptocurrencies, they're wanting to know what your thoughts are on, could in the future there be a way to manipulate the price of cryptocurrencies?
Well, I think on that front, first of all, we have to think in terms of how these things are actually being used. I mean, if you go to Southeast Asia, you'll find that it's more likely that somebody has a cryptocurrency account than they have a traditional bank account. So these are very easy for a young, up-and-coming generation in Southeast Asia, many of whom are gamers, and they live in a kind of an online virtual world. And so in that online virtual world, a currency just kind of fits the bill. And so there is, a differing kind of demand for cryptos across the world. Of course, in the United States, there is some business demand, but a lot of it's mainly investment, whereas in other parts of the world, it's actually just used to replace a traditional bank account because those may not be available or plausible for the average person. So as far as the manipulation of cryptocurrencies, one of the fears has to do with the mining community. There's a real big deal going on with Bitcoin now about the segregated witness plan, the hard fork, the soft fork. I don't want to get into all the details and all that. It's kind of a big debate. But I think that you could have some manipulation there on the side of miners. You also have the fact that with Bitcoin, for example, you have 21 million Bitcoin. 21 million. And that's all that's ever going to be mined. I think right now, if you take a look at the actual number that are in circulation that have been mined, it's around 16.5 million, I want to say. We're almost there. The very last Bitcoin supposedly will be mined in 2140. So it's going to take, another 150 years, 120 years to get to that place where you mine the final Bitcoin. But what we've had up until this point with Bitcoin is a pretty rapid mining rate. And so we're getting a lot of Bitcoin produced every 10 minutes and made available. But over the course of the next several years, just as the investment demand is ramping up, as people are aware of it, you're going to have these supply constraints that are built into the mix. Given that, you could have a Hunt Brothers kind of situation where someone tries to corner the market in one of these currencies. So that's another thing to keep in mind. And we would expect that will be part of the reason why we will have these busts and booms in the future, is people will try to manipulate the existing supply either by taking a large stake or just trying to mess with it. Now, the other thing to keep in mind, too, is that cryptocurrencies, on a larger point, there is a general fear, and I've always been suspicious of these things, especially Bitcoin, with the fact that we don't know who created it. Supposedly this guy, Satoshi, over in Japan or whatever the story is. It just kind of has a weird feel to it. And so it's, obviously conspiracy types can say, well, did the CIA put this out, or, did Russia put this out, or did China, so your mind can kind of go wild with, what was the purpose of these cryptocurrencies? Is it really just a legitimate stab at liberty and financial liberty to break free from the fiat dollar? Or is there something more suspicious and mysterious about these things? Are they a trap? So I think all of those ideas are legitimate in some form or fashion. I have a healthy skepticism of cryptocurrencies. I'm not walking around worried about them being manipulated so much. I'm more worried about being exposed to the cryptocurrencies that will inevitably last. That's why I've diversified. Even though Bitcoin is the reigning champ today, so was Sears, at one point before then Kmart. Everybody remembers Kmart, and then, of course, Walmart. So had you invested in Kmart before Walmart really made it big, you would have thought that Kmart was the end-all, be-all for retailers. And then, of course, you would have found out later on that somebody had a better mousetrap, i.e. Sam Walton. And so, I think it's the same way with Bitcoin. Bitcoin's the reigning champ now. It's good to have exposure to it. But it's also smart to pay attention to some of the smaller blockchain technologies because many of them offer a lot of promise.
Now, I know we were talking before the interview about how it's really important not to just, chase the price of Bitcoin, but to actually be investing in it for more fundamental reasons. Did you want to discuss this? Well,
I think, again, the other thing is, too, is I don't want to sound like I think everybody should be invested in, cryptocurrencies the way I am. I certainly don't know what the people listening should do with their own money. That's totally up to them and their families. Everybody needs their own financial plan. They've got to have a plan. And so when it comes to purchasing cryptocurrencies, I have always been encouraging to our audience, to our own audience, to at least expose themselves to it. So there's nothing wrong with, back in the day when I would tell people to go out and buy a Bitcoin, maybe it was like $200 or so. Today it's 3,000, so it's not, or 2,500 or whatever. So it's not as easy. But you can still buy a tenth of a Bitcoin. I think that it behooves the average investor out there to be exposed to the process of purchasing a cryptocurrency, even if they don't plan on investing in the space long term, or even if they're not wanting to be, trading it or being involved with it, just exposing themselves to it. I mentioned Trace Meyer just a few minutes ago, and he was someone who was an early adopter of Bitcoin, and he had made a great point to me early on and said that whenever email first came out, many people thought that was silly. They thought it was silly. They were writing letters to their loved ones, and they said, who in the world would sit down on a computer and type out a letter to somebody else halfway across the country? That just sounds silly. And maybe businesses will use that, but who else in their right mind would actually want to receive an email versus a nice letter with a stamp? And it was just hard for the mind of, a 20th century man to understand the value of email until email really began to proliferate. And then suddenly people said, who wants to write a letter? Why wouldn't we just send an email? So it's the logic has reversed. I think the same thing goes on with cryptocurrencies, is that right now, even though cryptocurrencies are adding value, even though they're addressing real world problems, even though they're actually adding value to the world, many people still don't understand what that value is or why that value is important. But if you look at people, or if you look at companies like Microsoft and JP Morgan and many of these other outfits, they're investing heavily into the blockchain technology because they understand what it is. So I think that it's, again, important that we don't all just rush out and put all of our money into these cryptocurrencies. I got an email the other day, Elijah, from one of our members who had said that one of his family members had just put his life savings into Bitcoin. And I think Bitcoin was about $2,000 at the time. And he wanted my take on that. And of course, my take was that's absolutely asinine. You don't put all your money into anything. You always want to be diversified because the rules of the game can change. I think that's the other thing, too. It's important for people to remember is that anything that challenges U.S. dominance, U.S. dollar dominance, is going to be heavily regulated. It's going to be suppressed. I.e. gold, i.e. silver, and thus cryptocurrencies. As cryptocurrencies now are nearing a $100 billion market cap combined, they're beginning to represent a real challenge to U.S. dollar dominance. Therefore, we're already seeing bills like, I think it was House Bill 1241, or it was a Senate Bill 1241 that just recently was proposed by Chuck Grassley and Dianne Feinstein, Senator Dianne Feinstein, that basically seeks to eradicate money laundering by going after digital currencies. So anybody who has more than $10,000 in a paper wallet and is trying to cross the border, that could be considered, some sort of money laundering or some sort of violation of a rule. And so you're starting to see some of this stuff arise. This is going to lead to the boom bust cycle of cryptocurrency. So as you see these oppressive types of regulations come down from Washington, it's just a further affirmation as to the value that these things really are adding and to the threat that they pose to the prevailing U.S. dollar dominance.
Definitely. I think it's a really important thing, as you were saying, to keep in mind that the rules of the game can change. And before we let you go, did you want to share with the viewers any last thoughts you'd like to add and where they can find you online?
Oh, sure. Yeah. Well, thank you for that. Yeah, they can always find us online if they want to get our podcast. We do a lot of video coaching calls for our members. We do one a month for some. We do 2 a week for others, different member levels. But they can go to followthemoney.com. We've written lots of free articles. We have lots of free podcasts, lots of free videos. All of it's there for people to educate themselves. We don't sell gold. We don't sell silver. All we sell is education. We want to help people understand where they are and how they can get ahead in this debt-based economy.
Definitely. And I'm just thinking, if you wanted a quick tell our viewers a little bit about how they can prepare in order to, you were saying the rules of the game can change. So how can people prepare in order to, still survive financially even when the rules of the game change?
Yeah, the key to being prepared for anything is really comes in the word of diversification. Over at our website, when you go to the website, if you click the button that says Get Started in the menu, it takes you to something called our 5 levels of financial freedom. And this is something, Elijah, that you've even seen in person. I presented this topic at one of the conferences we were at together many years ago in Las Vegas. But it's a very important thing for people to have a plan. And oftentimes we kind of shoot from the hip. We may see Bitcoin go up, 100% or 300%, and we say, oh, we need to put our money there. Well, if you're chasing that alpha, if you're always just chasing those returns, that can often lead you to the poorhouse. Also, many people will just put all of their money into one thing, right? Whether it be gold or whether it be silver, precious metals, whether it be real estate or whether it be cryptos or whether it be stocks, whatever the case might be. And one of the things that we teach, and we can certainly teach more if people want to come to our website and look, is the fact that you must be nimble because the rules of the game can change. And who makes the rules? The rules are made by the IRS, right? The federal government makes those rules, and they are made by the lawmakers, of course, but they are issued in the tax code. And so the tax code can change at any time. Because of that, it's absolutely vital that we be nimble, we not be over-leveraged in any one area, we be diversified across many various asset classes, and that we not be afraid to expose ourselves to things like cryptocurrencies, for a small part of our overall mix, because we don't want to miss out on what may be a very lucrative run in the future because of, whether it just be willful ignorance or just general fear. It's important that we overcome those types of things.
All right. Once again, Jerry Robinson, thank you so much for joining us today and sharing your insights.
My pleasure. Thank you, Elijah.